So China's flash PMI figure coming out for the month of September sitting at 47.8. It's up 0.2 points, but still below 50. It shows that the contractionary phase has not fallen further, but it's still below 50 overall. We're still waiting for Beijing to announce further monetary stimulus along with all the other central banks. But overall, are you still bullish on the Chinese economy?
I am. The PMI has been below 50 for a while, but it has been showing a bit of an upward trend. And often these surveys can be a bit skeptical about because, it's a big confidence thing and it's interviews with manufacturing managers and so on, and asking them what they think about the future of the economy. So it's like asking you and I, we follow these things quite closely, and it's purely based on opinion. And there's been a lot of negative talk out there and a lot of worry. So it's a confidence thing. And I know we're going to talk more about, central bank movements and so on. And it all comes down to confidence at the end of the day.
Because that's what they're there to do. I mean, apart from hopefully helping to stimulate growth, contain inflation and all that, price stability, we always look to Ben Bernanke to help us, through this patchy phase. Fed coming through with their bond buying program, ECB announcing that it's ready to step in. We had Japan also joining the three of them. How's this going to impact currencies on a net basis, do you think?
Yes, I mean, it's a war of the central banks now because obviously all of these economies really would like their currencies to weaken. And when they announce stimulus packages like this, they increase supply of their currency, and local investors will look for yield elsewhere. So this would inevitably weaken currencies. But if everyone's doing it, then it sort of neutralizes each other. But like I said, I think the most important thing and the most important tool that the central banks have is installing confidence. There's a lot of cash out there, and a lot of banks have high reserves and companies sitting and waiting. So I think central banks are just giving them that little nudge that they need to get the ball rolling, and hopefully there will be a knock-on effect coming from that.
But overall, it seems that the market is kind of losing a bit of confidence at this point in time. Do you think that this is a temporary blip, or do you think that we're going to see markets continuing to fall back?
Well, we had jobless claims that came out above expectations, which is a bad thing. But
and the trend isn't good in the labour market at this point.
No, it hasn't been good. But the Fed have been quite reaction, based on that. So obviously their current stimulus package is going to have no effect on the data coming out today. It's going to have effect in the next few months. So hopefully the confidence that they've installed, backing those mortgage-backed securities is going to come through in the future. But good signs coming through from the housing market, and that's extremely important for the US economy. Not only does it create hundreds of thousands of jobs, but it also gives people confidence to buy more houses as the housing prices increase.
I think I saw some stat about for every house built in the States, it creates 3 jobs or something like that.
Yes, exactly, and it provides more collateral to loan further on the back of your home.
Let's bring it back home. South Africa, MPC choosing to keep rates on hold at 5%. Rates are at ultra low levels. Does this increase the case for getting into equities if you're looking at kind of the asset allocation picture?
Well, I think some of the commentary was quite negative. She downgraded GDP growth to 2.7%, and that's definitely a concern. So I don't know, I think it's pretty neutral for equities at this stage. I think the biggest issue is inflation. And unfortunately, the rand seems to be remaining weak for a while because
and we
of
had
the
RMB guy,
situation.
just RMB guy saying that we're going to see the rand on a long-term basis weakening from here.
Yes, I think we underestimate that, the markets have picked up and risk has been back on, but the rand has remained fairly weak. If it weren't for these mining situations, I think the rand would probably be below 8 to the dollar at this stage. So, that's inflating the rand, and that's definitely a big inflation concern. So not only has the mining, brought a lot of negative rhetoric, it's also kept the rand weak, which has possibly prevented the NPC from cutting rates. So you can see how the negative impact spreads.
Yeah. Talking about some of the stock movements today, Steinhoff being hit on the day, one of the worst performers, in fact, I think down 3.2%, announcing that it's going to be issuing or hopes to issue 400 million euros in convertible bonds, and then it wants to repurchase July 2013 bonds with some of that money. It seems the market doesn't like this news, but what are your thoughts on that?
Yeah, basically, to simplify things, they're raising debt to pay off debt. Which is not an ideal situation. The company,
but maybe they don't want to, have that dilutionary effect on the share price, perhaps, because obviously those convertible bonds could, be converted into equity.
Yeah, exactly. But shareholders voting with their feet. The company is 45% geared, and companies raising debt at this stage with global concerns and so on, is definitely put investors into a negative mindset. But Marcus Jooste is always very confident, and he's happy to do his thing, and maybe it's a good thing, raising capital when interest rates are low, taking advantage of that situation and buying when everyone else is selling. It's a company I like, and on a contrarian view to things happening in Europe. So I would take advantage of this pullback.
Of the weakness, yeah. Just staying in the whole theme of convertible bonds, Capital Shopping Centres looking to offer £300 million of senior unsecured convertible bonds due 2018. They came out saying that the coupon is 2.5% per annum, semi-annual. But we are starting to see more companies, ShopRite did it, issuing convertible bonds. What are your thoughts on getting exposure to a company via that versus the equity?
We much prefer equity. You get the capital gains. Preference shares and convertible debt. We don't. You don't get the dividends, and we much prefer being involved in the equity side of the business.
Okay, so we've had Remgro's results just coming out now. Their full year headline earnings per share up 26.1%. Let me just take a look. Ordinary dividend up 25.1%. Do you like the moving parts of Remgro, because they've got a lot of unlisted entities, the likes of Total, and then they've also got a lot of listed entities, First Rand, RMB Holdings, etc.
Yeah, that would be to be expected. 26% growth. We saw, 46% in their last year. I haven't seen these results yet, but last year, 46% of their earnings came from their financial assets, and we saw the results from First Rand and RMI and RMB look quite good. So that's obviously coming through and making a big influence. It's not one we particularly like. We prefer to, look at the companies, the listed ones that they have, and buy into those if we wanted to, but we actually have none of those on our recommended list. Some of the assets that they have which aren't listed are quite compelling.
Unilever, you get exposure to the consumer space and perhaps in Africa at some time.
Yeah, but you've got the likes of Tiger Brands and so on to get into that sphere. So we don't see that buying into Remgro justifies their management fees.
Thank you so much for joining us today. Byron Lotter, Portfolio Manager at Vestact.